Should you invest in real estate during a recession? Even during the Great Depression, investors won big on real estate stocks, in particular when the market recovered. Based on the history, it seems to be an easy answer, but it's not. First, if you're buying a property to live in that won't yield any revenue, in fact, it's going to be the opposite. You need to pay for maintenance, taxes, insurance. I mean, it's not an investment. If you're buying a property to rent out, it's more likely to bring in money, but you need to think about market conditions. During the pandemic, commercial real estate properties were rendered useless. Stores and offices were forced to close except for the necessities. Workers were forced to work from home. Now companies are having to force their employees to return to work, even if it's not necessary, just to increase the value of their properties. On the other hand, landlords of residential properties were allowed to evict tenants suffering COVID-related hardships. Eventually, AB 832, or the Rental Housing Recovery Act, reimbursed landlords 100% of unpaid rent incurred by qualifying tenants. Landlords and tenants could apply for assistance via a program called Housing is Key. To sum it up, buying real estate is risky, but with every risk comes potential. On almost every recession, property prices go down. That means lower entry costs for you. Real estate has also outperformed stocks over the last 2 decades. Add to this the fact that there will always be a market for it. Housing will always be a basic need. People always need a place to live. People can hold off on traveling or buying a new phone if money is tight, but you'll find almost no one choosing to live on the street just to buy a new phone. So as long as you find a good location that fulfills the renter's needs, you should be good. Also, as we initially showed you, real estate tends to be more stable. The Great Depression and dot-com bubble flipped the stock market on its head, but investors in residential real estate didn't suffer as many losses. In fact, single-family rental assets recorded positive values as a sector at the tail of even the Great Recession. Small-scale residential investments aren't part of daily trading activities like stocks. As such, they provide stability when the stocks are volatile. You just need to consider things like location and cash flow. Find a location that caters to a specific group of people. A property closed downtown, for example, will cater to workers in retail stores, offices, and other establishments that need their employees to be physically present. It doesn't mean a residential property in a suburb isn't a viable option. Maybe you're catering to retirees, freelancers, or those that work from home. The barrier to entry is the cost. It isn't cheap to buy any real estate, but it could be worth it in the right conditions.